The jobs report, meantime, was top of mind for investors all week long. Now that it's behind us, what's next? Earnings season. For more on that, we'll hear quarterly results from Pepsi, Delta, Tilray, and a slew of bank earnings, JP Morgan, Wells, and BlackRock. And to talk more about what to expect, Dory Wiley is Commerce Street Holdings CEO. Dory, how important is earnings season right now?
Well, it's very important. We're coming into an election in November. Who knows what we'll have on October? Surprise. We had a 50 basis point rate cut, which is a big number. It should normally show some concern by the Fed, even though they tried to downplay it. So where do the earnings take us? And I think that's going to be very important going into next week, starting with the big banks.
We used to talk about Alcoa kicking things off. We no longer do. We often talk about JP Morgan. And Carter Worth was on here yesterday in Market Navigator saying he doesn't think it's trading well and he's worried about, I'll say it, not him, but the kickoff to earnings season this time around.
Yeah, I don't expect a bad number for them. Jamie warned us in September, I think it was September 10th, of lower numbers, and I think so did the others. But I think they've adjusted for that. I expect them to come in about $4 a share, maybe a little higher revenue than a year ago. But for every one of them, J.P. Morgan, Wells Fargo, Citi, and B of A, not Goldman Sachs and Morgan Stanley, but all of them, I think, will have lower earnings than what they had a year ago, but on similar revenues. The real question is, how does credit look and what's happening to the bank margins? Well, with a 50 basis point cut, we're not going to have a big effect on bank margins. I think the market has unrealistic expectations on that. We just need to see good, clear credit on them, get them through this earnings season and see what happens to the rest of the S&P 500 as we get moving.
I know we're CNBC, Dory. We love talking about JP Morgan and the big banks, Goldman Sachs. But you say a name like a Huntington Bank shares, just kind of chugging along, doing their thing in that upper middle market is maybe a better type of company for investors to look at.
Yeah, think about it for a minute. If you have a rate cut, JP Morgan's very diversified, so they're going to have a smaller loan book as a percentage of assets than, say, Huntington or even smaller community banks. So the lag effect's going to be better for them. The question is control of deposit pricing. JP Morgan has excellent control, but some banks like Huntington, who has led deposit growth in its peer group, are going to have more pricing control over their deposits than some of the others. So I can buy Huntington at the same PE multiple, forward PE multiple, as JP Morgan. I got better growth prospects, better margin expansion prospects, and I get 190 basis points more yield.
Steve Steinauer's been a friend of the program. Maybe we'll check in with him. I'll do you one better and say I heard the case, I think it was Sam Haskell, saying for Esquire Bank, and they fund commercial litigation. So it's almost like the more kind of niche that you get in away from the big banks, the more investors see potential here. What about big tech? What about the possibility that now, as we lap the second year of the bull market, the third year could get tougher, interest rates are backing up now, and leadership might have to rotate?
Well, historically, if you look at 2 and 3 year returns on the S&P, with what are we pushing, 60% over 2 years, it actually tends to go into the third year, but at a lower number. So I wouldn't be surprised. After doing 20% so far this 9 months, we've got a little bit more to go. Maybe it stays a little flat. Forward PEs are higher than 5 and 10 year averages. But I wouldn't be surprised with the earnings growth. And that's what we want to watch here in the quarter. As long as that earnings growth is still there and we're holding about 11%, 12% margin on S&P 500, there's no reason why we can't have another 10% growth in the S&P 500 next year.
This is sort of a layup for Brian while he's sitting here, but a couple of the names you think you might want to be looking or to pick up in October are energy plays, Energy Transfer, Exxon. Just walk us through what you think we might expect in that front in the next few weeks' time.
So this is a trade, right? Israel gets attacked, and for the first time, they don't really. We haven't been very helpful to them. Okay, without getting super political, maybe a little bit, but the administration's been pretty standoffish. Now, it wouldn't surprise me for Israel to strike back without our permission or without talking to us. And now they're going to hit them hard. They got 193 missiles hit them. So there's no reason for them, after what they've been doing to Hezbollah, to not only go after leadership, but go after these oil refineries. Now, I think the administration is going to try to tell them to delay at least until after the election before that happens. But that's what I'm looking for. I think when something like that happens, it's either going to be in October or after the election. I do think it's coming either in a big way where it affects about 1.5 million barrels a day, or at least 300,000 to 500,000 on smaller refineries. Then I think that's a good pop for oil. I think there's a good case for more energy independence. And I'm looking for some dips before that happens, and I haven't seen it yet. So hopefully we'll see some.
All right. If we get that, we know where your attention will be. For now, Dory, thanks for your time. Dory Wiley.
You're welcome.
All right, still to come, a decision that could